3 transactions happen because of just knowing this one strategy and how to put that together and how to underwrite the risk and make it fair and all the things. Isn't that fun, boys and girls? Welcome here to Property and Paper Live. My name is Dawn Rickabaugh of NoteQueen.com. I'll be your host as we talk about real estate and notes, right? Property and paper, real estate and notes, and seller financing is that vehicle that connects the two. And I had promised, okay, I know I don't want AI companion. Do I have any chats? No, I don't. Okay. So I promised to talk about partials today. Does anyone have a particular note or situation that they're going to want to talk? I just want to know who's in my pipeline for bringing up later. So don't hesitate to chat, even though I might not even see it. So you guys can you guys can help me keep track of the chat if I miss it. So hey, Kurt, David, Mike, Ken, great to see you. But anyway, so basically, of course, we're talking about, you guys know I love my little gizmos, right? My dance between property and paper. Because if you can take a property and know how to turn it into paper, or take paper, a note, and turn it into property, everything in between, what we're really after here is knowing how to fluidly move between cash, property, and paper with equal ease. You should be able to turn cash into a property, and then, like many people do when they get older, is they take their real estate portfolio and turn it into a paper portfolio. So they end up owner carrying and carrying a note and be the lender instead of the landlord. Where we get stuck is not knowing how we get from the note back to cash, or to put this note together in such a way that we can get the maximum possible cash. And I've talked many times about this, but the big disconnect, even among professionals that can walk sellers through seller financed transactions, almost none of them ever tell their client, by the way, did you know that the note that you're carrying through this owner finance transaction, did you know that there's a market for that? Did you know that someone might pay you for that? And also that depending on how you put it together could greatly affect the value of your note. And so it's just a travesty in my mind that the way that most owner carry people find out that there's a market for their note is not from any of the professionals that took care of them, not their real estate broker, not their accountant, not their attorney, not their title company, not their financial advisor. They find out from a postcard from some Yahoo like me, who would send a letter and say, hey, you want to sell your note? And they go, oh, that's a thing? And they get on the internet and they start searching, and then they find all the people who spend thousands of dollars a month on SEO for note buying. But so everybody needs to step up here. We've got a massive gap in the market that needs to be filled with this understanding of how seller financing and the private mortgage market can keep the wheel going around, the merry-go-round going around. Yes, with or without the banks. So we have a really I think it's going to be an interesting year, and nobody knows. So many smart people I listen to, and nobody really knows what's going to happen. The fact that the silver market, what is it today? Well, it was over 90 last time so you know what? I think it was 95 last time I looked. So things are changing, things are breaking, things are shifting, and they may be slow and a slow grind, slow burn, as they like to say, or we could have many take your pick of black swan events that could rapidly change the financial system. The financial rails are being built upon the blockchain. If you're paying attention to that at all, it's undeniable. And so there's a lot of positioning to be done now with this blend of cash flow that keeps your bills paid and hard assets that appreciate with inflation and get ahead of the trends that are happening. Anyway, also I forget to mention a lot of times that I have this concept of round table investing. And here's my round table. And these swords are where I'm playing in the market. So of partials, where do they fit? All they fit down in here is if, not landlord, is I'm buying a front end partial of somebody else who did seller financing, right? They carried their paper, and I'm either buying or selling these, right? So depending on what I want. Okay, so this is the sector, the passive investor sector. We have retail people, we have professionals, wholesalers. I do a little of that too, and I'm an agent now again after many years, and active real estate investor as well. So anyway, why partials? If you're a seller, you own a note. You're receiving the payments on a note. You do not have a note to sell if you were making the payments. That's not your note. That's your debt. That's your liability. But you cannot sell a note you are paying on. Yeah, you can only collect or sell a note that you are receiving payments. You're the note holder. You're getting, it's a real estate annuity. It's this money that just comes in month after month after month, hopefully automatically without a lot of drama. But if you if $1,000 a month just isn't handling it, and you have an expense that you need to pay off a loan, you have medical expenses, you need to buy this, you need to send Joey to college, whatever. If you sell the whole note and it's a long-term note, you're gonna get chopped off at the knees, right? So like in general, a typical owner carry note that mirrors the bank paper, meaning 5-6% interest rate, 30-year fully amortized, you're looking at, well, 50 cents on the dollar. Let's just call it a fat round number, okay? So if you only need $50,000, why would you take 50 cents on the dollar from your overall balance, right? So a lot of times you can get the cash you need for a purpose, but without selling the future payments, right? Taking the big discount. And why is it a big discount, right? Because inflation. You guys, I'll tell you about this note if we have time. 58-year amortization. I'd never seen that before. But I would love to be the one paying on that. That would be the power position there. But anyway, it's a way to, sometimes we can, and we'll go through this in the first example I'm bringing up, is that you can sell 3, 4, 5, 6, 7 years worth of the note payments, the receivables, and give up very little of the principal balance. So it's a very, it's a discount you can swallow, that it's palatable. Okay, and then sellers, here's okay, this is your niece or your nephew, and you carried paper because they're family, and now they're not paying. And what are you gonna do? Foreclose on your nephew? That's pretty embarrassing, right? So, I mean, it's just like family suicide. So you can sell a partial, you could sell the whole thing for a massive discount, or you can sell a partial, let someone else be the front man, do the dirty work that needs to be done. It's not dirty work, okay? I don't want to frame it like that, but the natural consequence of behavior, someone can be the enforcer of the natural consequence of behaviors, and you get to you're hidden in the background, and they will never know that you still own most of the note. You can sell off a piece of it to someone who can take care of the mess for you without discounting it tremendously. Number 3, real estate investors. If you're like a rehab, like a wholesaler or rehab flip guy or whatever like that, this is your business. You can create your own private pension by, okay, so you can sell for quickly and easily for the highest possible price, offering owner financing. If you do it intelligently, you can sell off the front part of the note to recapitalize, get your seed capital back, maybe not all of it, just depends on the situation, but most of it, so that you can take that seed capital and rinse and repeat and rinse and repeat. And all, you know, when you're older and you're tired of the hamster wheel, these notes start coming back to you at 5 and 7 and 10 and 12 and 15 years. And you can set yourself up with a massive private pension with these, you know, like run like crazy while you got all this energy and this fire, you know, do it, go out there, do it, crank, crank, crank. And then when you're tired, these notes just start coming, these note payments start coming into you. Okay, now buyers, as a buyer, why do I like partials? Well, if there's a property worth $400,000 and the note is $300,000, do I want to buy that note at $250 or $280? What would I be? That's still about 70 cents on the dollar, right? Or would I rather have that same yield and only come to the table with $100,000? So do I want $100,000? What if the property drops in half? Oh, well, I would rather have the $100,000 partial, right? Not always. There's so many like, but what about this? Okay, I'm just bringing up some train of thought that we can follow. So it's, even if the market would drop in half, which I'm not saying will happen, maybe in some areas it's already dropped quite substantially depending on where you live. But if you bought a $300,000 note, the whole thing for $280, and the property drops in half, now you're exposed. You have no protective equity. If you just bought the partial, you're still sleeping really well at night, right? So for buyers, the other reason is, you know, it's sometimes I have done things just for the positioning. Of course, you like the yield and the income, but buying a partial is, yeah, you get the income plus you bought an option for free. Because guess what? Nobody's going to buy behind you. You control the note and deed of trust, the note and mortgage. You're going to create an option where you're the first right of refusal to buy more pieces of the note. Okay, so you got deals in your pocket today, and you got future deals that you have positioned yourself really wisely to get. Okay, so you might even do a loss leader. If this is a note you really, really want, you could consider just going, I'm not even going to make money on this, but I'm going to position myself that I can buy more later if, you know, anyway, just to put it out there. Then number 6, deal makers, agents, you know, whether you're licensed or not, a professional or hobbyist, you can get paid making real estate transaction happen that otherwise would not be possible. There's ways to make money up front, in the middle, and at the end, depending on how deep and how broad you want to play in the space. So this for one example, and so this is really fun. All right. And this is why I have my calculator up here. So feel free, if you don't have a financial calculator, you need to get one. HP 10B2, it won't cost you very much. Okay, so 420 sales price. Their property wasn't selling. It was listed and it wasn't selling and it wasn't selling and it wasn't selling. Okay, and there's this person, like, she only had 20,000 down. Okay, she couldn't qualify for a loan, but she just like was on it and on it. Finally they said, okay, we'll do it, but we need $80,000 because the property we want to buy is, we can't get a bank loan either. And they've been sitting on the market, but they need us to put $80,000 down, minimum. So we'll take your 20, but where are we going to get the rest, the 60? So This is where us property and paper, like Island of Misfit Toys people get to play. You know, we get out our geeky stuff and we start going. So basically, let's put the deal in the calculator. 420. Oops, let's clear all. 420 sales price, $20,000 payment. So we have a $400,000 note, right? And I believe the interest, we had to make it what she could afford, right? So she could afford this payment that we're going to get to. So we probably reverse engineered it from there. They did a 360, fully 30-year, fully amortized. And then basically it was due in 5. That's pretty common when someone's going to own or carry, but they're not in the business, but they'll carry for 5 years. This is pretty common that you will see. So they'll get 60 payments of $21.47 at the end, provided the note pays off on or before that date, right? Or pretty close to that date. So they have 367 left. But I'm going to take that out because I don't want that to mess up my numbers. Okay, so let me put this back the way it was. All right. So then the seller needed not only the 20 plus an extra 60,000, they also had to have $500 a month to live on from the note. So what that means is, of this payment here, I have to, well, in this case, I'm adding to a negative number. I'm going to collect the whole payment. No, we had a servicer that collected the whole payment, sent them their $500, and then sent me the $1,647. So this is what I'm dealing with. Like, this is my receivable here. And what am I going to need? I don't know. I just always start with 12. And let's see, what do they need to get? 60,000? I'm just going to start there, and I'm going to go, oh, all right, that's pretty close to 48 payments. Okay, and then let me look to see, because on the short amortizations, your yield has to be higher to make sense. Because you're going to tie up a big bunch of money. Is it worth tying up 60,000 to make 20? It's not like an interest only. If it was interest only, you'd be making all this interest every year. You'd make a bunch of interest, right? So it's a different animal, and people have a blend usually of amortized notes and interest-only notes in their portfolio, both short and both long-term. So yes, this makes sense. I would do this, right? There's room in there. That makes sense. So that's how I figured it out, is that's for sale. I can buy 60,000 for for the right to receive. I take the full assignment of the whole note. You look in public record, we're not sharing it. I own the whole thing. And that's why you have a servicer usually in the middle to keep score. Everybody knows that what the deal is. So the remainder interest is this. And how do I know it's 374? We put the balloon in before, but I'm not even buying up to the balloon. I mean, I'm only buying 4 out of 5 years. And this is no seasoning either, right? But what's my loan to value, my investment to value on this? 60,000? I have risk against a $420,000 asset. Let's say that's generous and it's only worth 320. I'm still like good all day long, right? I mean, it's less than land value, for heaven's sakes. So basically to get, okay, well, what will they get after what will the balance be of the note? I have to recreate the note. Other people may be way smarter and whizzier at this than me. But this is just my old school way that I did it with a pencil and an iPhone is how I started. And t-value, not gonna lie, t-value. Okay, so then after my 48 payments, what's left? $374,520. So the seller gets their price. They finally get off the market. They get $20,000 from the buyer. They get $60,000 from me, and they get $374 remainder interest, right? So this isn't even counting the down payment, but they have, for their $400,000 note, they only took like a $5,500 discount on the principal. That's very palatable on paper, isn't it? And also, what's more fun is it gave them the chance to now go and buy their property that they wanted. Okay, so now they take the $80,000, the 20 down, and the 60 from the partial, front-end partial sale of the note. Now that 80 goes over here as a down payment on this property. But the seller needs 150. So now what do I need to bring to the table? This was all in one deal. We did it all in the same week. So the note is, in this case, they don't need to keep a piece of it. So they're, the numbers you'll see are a lot different. These are slightly off, but all right, 500 minus 80 is a 520 note. Not 520. Oh my goodness me, and public math is not, okay. 420 note, and this person wanted 6%. I'm gonna make the future value 0 again so it doesn't mess up my thing. And again, it was a 360 due in 5. So that payment was $2,500. Now, the more money you collect sooner, the less of a discount it actually feels like. And also the interest rate's a little higher. So that would mean that the discount is even less, right? So basically, then, well, let's just, what do they need? Oh, they need 70,000. And this is I get the whole payment. I don't have to leave part of it for the seller. So I always just start with this number just for kicks and giggles to see how close am I. Oh, well, that's pretty close to 36. That's a good round number. And that's closer to 18, which this is 3 years instead of 4. I needed like 14, 15 to make it make sense on a 4-year partial. But let's see if this, on a 3-year partial, oh, it sounds like such a high interest rate, but like how much money you're actually getting back. Oops. Oh no. Oh no. This is just what happens. That's hard. Very sad for Dawn. She makes these mistakes. Okay. Need 70,000. I'm gonna, I'm going to do this. We already got to that point, right? So let's look at the amortization schedule. I'm going to tie up 70 grand to make only 20. You can see you're making interest and it's a high yield, but most of your money you're getting back every month is in principal. And that makes it really safe, but it also means now you're collecting your principal back, and now you got to, instead of just deploying a interest only thing and letting it ride for a while, you got to collect your principal and then redeploy it again, because you just don't want to sitting there idle. So there's all sorts of different ways to think about it, but yes, this makes sense. So this seller gets 80,000 down payment, 70,000 just selling only 3 years of the note. And how do we get this again? What's left is, well, I just recreate the note again, like you've seen me do already a couple times now. And then if you're listening on podcast, this is really boring for you. That's for sure. So I put 36 in N here, and then the future value after 36. After I receive 36 of these, the seller of the note, seller of the property, and then the seller of the note gets the principal balance when they get the note payments back is $403,553. So we can see that they're getting, okay, so here's this number, they got this, and then for the sale of the note, they got, did I do this right? Yeah, 70,000, right? So they're getting 473,000 for their 420 note. What? How does that even work? It's magic. It's magic. And this is the magic of knowing the discounted market for notes and seeing how you can create solutions. So then what did this person, why did they need the 150? Because they went the next week after that and closed on 10 acres of land somewhere that they needed 150,000 cash because they were going to build their dream home there. So we, just by knowing this partial trick, this owner financing and notes, we made one real estate transaction happen that otherwise wouldn't happen. We made a second real estate transaction happen that wouldn't happen. And we got this person to be able to pay cash for their dream home into retirement. 3 transactions happen because of just knowing this one strategy and how to put that together and how to underwrite the risk and make it fair and all the things. Isn't that fun, boys and girls? Take this information and go out there and create financial solutions, just one mom and pop to another. See you next time. Take care, everybody. Thank you so much for engaging with my content. If you'd like to participate live and hear the rest of the replay, please go over and join our free community, citizensoftherealm.com. Hope to see you around the queendom. Take care.